Thank you so much, Asiri. It's good to have you on the program.
Thank you, Tolu. It's good to be here.
Yes, I think this afternoon we will start our conversation around the tax space before we get into other discussions. Nigeria says there's a comment that the lawmakers, last week we saw them in action, reaching out to all parties to be part of the public hearing ahead of the passage of the new tax laws. But let me ask you generally, how would you react to this move, this point we've gotten to with regards to this reform in the tax system?
So Tolu, I think it's been a rough ride in some sense, because we did have quite lengthy conversations at some point around the VAT reforms. And at some point, we even felt maybe the tax reform would be suspended or halted because of the divisions around how VAT would be allocated. But having centered interest around the need to raise revenues, the need to address certain social issues within the economy, and how these tax laws would definitely, add to that process. I think we've made very commendable steps, and with the Nigerian lawmakers now opening it up for public hearing as well, I think that's also very commendable. What this has done is engaged all stakeholders in the public hearing process, be part of making these new tax laws, therefore making it very inclusive, making it very comprehensive, and also allow that we can address the concerns of various groups. I believe that this approach would definitely lead to more effective and equitable tax legislation. And ultimately, this should foster greater public trust and compliance, because one of the reasons why this reform has even started is the need to fill the gaps when it comes to compliance from taxpayers, but also the need to shore up funds that's required to build our society.
Interesting stuff there. There seems to be a lot of expectations, of course, from the passage and the implementation of these tax reforms. Specifically, many think it's just about revenue and all of that. Can you help highlight some notable positives and what it means for the federal government? Of course, we know that there's need for money to meet budgetary demands at this time.
Yeah, so I think the reforms have come at a time where we had really raised a lot of concerns around the viability of the tax laws. One, in terms of how clear they were. So the lack of clarity sometimes in some of the tax rules meant that it was very difficult to comply. And in certain instances, you then found that the trust gap increased. Secondly, you found that the tax laws tended to be a lot, there was a lot of ambiguity, in the tax law. So you could read a piece of legislation now, there could have been a regulation that was passed before, or a circular or public notice that was issued by the taxing authorities, and those didn't align. And so they're very, very difficult to interpret. And so when it came to adjudicating those type of issues in the tax courts, then it's difficult to get to a fair hearing. And those interpretations could lead to disgruntlement within the system, but also, again, reduced compliance. Further, we had obsolete tax laws. For instance, we had the Stamp Duty Act that's as old as 1939 and still looking at documents that probably are outdated. We had we continue to have a weak and fragmented revenue administrative system. Just think about it, Tolu. We have about 36 states, and in each state we have a taxing authority. We also then have a federal authority. And at the local government levels as well, there are agencies for raising taxes. So what that means is, in terms of reaching out to taxpayers must grapple with several authorities. Administration then becomes cumbersome, very expensive to run for the government, but also expensive on us as a nation and as a tax-paying nation. And so it's important that not only do we look at raising revenues, but we also look at making that process simpler, lighter for the tax populace, and for the government as a whole. Yeah.
Okay, let's take a minute break and we'll come back and continue this conversation. Business Unit. Thank you so much, Asiri, for joining the program again. So we're talking about the positives, of course, expected from these reforms. A lot of work has been put into this, and I'm so worried because when I think about Nigeria's tax rate to GDP compared to other African countries, we are not doing as well as we should do. So if all of this happens, you understand this better than I do. Mine is to ask the question, are we going to do better than what we've been doing? Talking about, meeting up. Nigerians don't want more taxes. They don't want that because you know what the economy is looking like. So specifically, what should we be expecting again?
Yes, so I think the tax bills were, there are a lot of them. There are four actually, but there are a lot of provisions within them to address several things. And some of those issues I had identified earlier, especially around the fact that the administrative system meant that because we have all these administrative authorities at the federal, the state, and the local government level, it means that you might have pockets, gaps where you're not able to collect revenues, or sometimes those revenues go into non-state actors, the pockets of non-state actors, and that's not to the benefit of the nation. So at the end of the day, if you drill down, you might find that individuals and businesses alike may be paying their fair share of taxes, but those taxes aren't making their routes to the right coffers. And so one of the key things around the tax bills that's being proposed is on better administration. So there is one on the joint administration as it relates to revenue administration for the government. And they're looking at consolidating how all of these authorities will work arm in arm so that you leverage off data that's gathered at the different tiers to enhance revenue collection. Two is also the fact that some of the laws are outdated, not addressing current business realities. For instance, there's been a lot of increase in the global digital economy, and the fact that Nigerian entrepreneurs and our youths play significantly in that space is something that hasn't necessarily been captured, in the existing tax laws. So say, for instance, you have a foreign company who is looking to work with a bright young Nigerian sitting out in Lagos who has data or digital skills sufficient to be used remotely, and they're paid some income to do that. The truth is that the current tax laws we have may potentially expose, one, the foreign company to taxation in Nigeria, but two, it's also that individual may not even be captured in the tax system. So what the tax law is looking to do is not only get the best parts of both worlds, but to also say we could also speak now better to the digital economy. We could design tax laws that address the new and thriving realities in that business, but also in terms of incentives, who are the right or what's the right sector or economy or industries that should be getting incentives. So another thing again that the tax laws is proposing is how do we now start to rationalize tax incentives that could drive economic growth? The one area, of course, is around the digital economic growth, but that's not the only economies that we're looking to improve on. So we've seen that over time, we've had tax laws that have pushed for tax holidays, say 5 years at most, but sometimes those tax holidays are given at the expense of the economy, because you might enjoy the tax holiday, but it doesn't necessarily mean that it's being productive or that the incentive is targeted at the right industry that we want to grow. And so what this tax law is also trying to do is redesign those incentives, bring together all the incentives that we've looked at or we've given over the years, look at them and be sure that they are consistent with what it is that we're trying to achieve in terms of enhancing productivity, identify targeted sectors that we want to give these incentives for, and for the period that we want those incentives to last for, because I guess the projection is that at least to a very large extent, we should be net exporters, even if it comes to some of these sectors. So whether it's agriculture, do we want to become just stay as importers, or we want to become net exporters? What are the right incentive frameworks that we should be designing for that? And so this tax law looks at that as well. One of the other things that the tax law does is to try and reduce the arbitrage when it comes to planning. So we've seen instances where, because of the differences or the disparity in tax rates, say when you dispose of an asset, you're charged a lower rate at, say, 10% on the capital gains. But when you earn income from using that asset, the tax rate is higher, at, say, 30% if you're corporate, or about 20% if you're an unincorporated entity. How do we ensure that planning is not done so that you start to describe your income streams as capital gains and then enjoy the lower rates, and then avoid paying the right rate on the income that's arising from there? And so what the laws are proposing is we should avoid that arbitrage by unifying the tax rates on gains and the tax rates on income, as we have in other jurisdictions. So Nigeria has fallen back in terms of updating the tax laws to remove those arbitrages, whereas other jurisdictions are gradually reducing those gaps by saying our income tax rate and our gains tax rates should be the same. So the tax laws are proposing, look, we must move from 10% to about 20 or 30%, which is the income tax rate, so that the incentive to plan around those kind of gaps kind of reduces, and then we can block some of those revenue leakages. The other thing as well that it's trying to do is, in areas where we didn't have clarity, for instance, there is a general principle around when a country can have taxing rights on the income you earn, whether as an individual or a company. One of those concepts is something we call residency. Now, Nigeria has over the years not had anything called the definition of a resident. So because we don't have that definition, if you take, for instance, the US, who very clearly says, if you're a citizen of the US, wherever you go in this world, you pay tax on your worldwide income. Nigeria doesn't have that concept, but then Nigeria had failed to define who a tax resident is. And so what that means is you could conveniently exclude yourself from taxation as well. So we had certain individuals who could not be captured because of the way the tax laws were designed. And so those are the gaps being looked at. But the good thing as well, and positive, is also the fact that, bearing in mind that we do have a vulnerable population, we have youths, we have aging mothers, we have women, we have children, we have a huge nation that we need to cater to, and there are social norms that we also need to deal with. What the Act is also looking to do is to say we need to be mindful of the vulnerable and increase the threshold of bands between which we tax. And so what they've done is to increase the bands at which the lower rates will apply. And so you have a lot more of the lower income people not being hit with high tax rates. Especially, again, remember that in 2023, we had a triple shock where we had high inflation rates, high interest rates, and exchange rates, just went through the roof. And so what this is doing is being a lot more sensitive to say the rate at which we tax our low-income earners needs to, be taken into account. And so that band has now increased, whilst the band at which we will tax the high-income earners increases. So I guess, Tolu, you are a high-income earner. You will pay more taxes for the benefit of the vulnerable who can't afford to pay these taxes.
I'm just a struggling journalist.
A struggling journalist, yeah. So I think it's actually it's good that we've been sensitive to those causes as well, and sensitive to the fact that we've just come out of a very big, reform from last year. So the tax reforms have taken those into consideration in designing the appropriate rates at which taxes will be applied.
Brilliant stuff there. Well, let's talk let's talk around your core mandate at PwC, focus on African family businesses. Can you help us in 1-2 minutes why family businesses collapse across the continent?
Yeah, so the reason why family businesses have over the years not stood the test of time is the lack of or failure to professionalize those family businesses. And sometimes you might hear things like the bulk of our economy sits in the informal sector. Yes, we do have a culture of growing independently because of our entrepreneurial abilities. And so you might find that each man by himself builds his own unique business. But whether those businesses have been built to last is another topic for conversation. And that's why we're discussing this now, to say, how can you then move from that place where you have ideated a solution to a problem within your own entrepreneurial confines to solving problems at a bigger scale? And this is where formalizing those businesses come in. Most businesses that start do not know the A to Z of formalizing their businesses and formalizing it to such an extent that they attract much needed capital to grow, to scale up, but also to expand across borders. And it's not just expanding across borders, because sometimes we also do that very well, but it's also expanding across generations. Now Nigeria is probably at the echelon when it comes to leading businesses, perhaps at the age of 60. So most of the leaders of our businesses are very much getting into that age where they might retire. And one of the big questions is, who would be the next crop of leaders that take over those businesses? Sometimes the events that happen is not really about, someone dying. It may just be that you get it to an age where you can no longer handle the business as you did when you were young. But have you groomed the right person that could take over those businesses? Do they know, for instance, that there is a family business that they should be taking over? And is it just being introduced or invited to the table because of your bloodline? And so what we try to do is identify the two areas for succession across ownership and leadership. These are two critical components where you identify a leader who can own the business, but you also groom and identify leaders who can lead the business. And those are two different concepts that are not broken down in the minds of the entrepreneur, because the entrepreneur has all along handled it by himself. But in terms of handing over to the next generation, you must identify who's sufficient enough to carry on the baton. And those two critical areas are one that you need to be mindful of. And so professionalizing along those lines is somewhere that we probably have failed. For instance, there's a lack of a succession plan. Estate planning as well is probably not done properly. So you then tend to have a lot of disputes, whether it's over wills or it's over the lack of a trust, or even the family members don't know that some of those assets exist because there haven't been proper audits done. So there are a variety of issues that cause for businesses to fail. Aside from those external factors related to policy reforms, there are also internal factors within families that have to be sorted. And when we talk of corporate governance, we say that businesses that plan to fail are those without corporate governance structures. Family businesses as well that plan to fail are those without family governance structures. And those two must complement themselves. Family governance, corporate governance, the structures that those businesses, operate in, the environment within which they operate in, and making sure they are tailored to thrive beyond those environments. And of course, with most of the global changes that we're seeing, such as AI, it's the business that we built before AI came into being may not really go beyond if we don't build for purpose. So making sure that you're able to succumb or thrive even in the midst of these new trends like AI is important, and businesses need to be structured for those. But then sometimes those owners don't think about them in advance, and so those businesses fail in one generation.
I think that's our time. I wish you happy International Women's Day. I thought we were going to touch that, but maybe we'll have you again in so that you charge the young ones to be able to see what they can do, of course, to enjoy the benefits of womanhood. But I must thank you so much. Interesting conversation with you as always.